In this video, we are going to be looking at the non-allowable deductions, the things that are not supposed to be subtracted. We are supposed to add them back. They are supposed to be taxed. So except otherwise provided in the Income Tax Act, no deduction is allowed for the following. So we are going to be looking at the non-allowable deductions. So the first one is any expenditure or loss incurred by a person to the extent to which it is of a domestic or private nature. If you incur any expenditure using business money and that expenditure is for your private benefit, you as the owner of the business, or for the private benefit of the employees, and it's not taxed in employment income, it is supposed to be taxed, so it is non-allowed. If you buy yourself a car using business money, it is supposed to be taxed. So any expenditure or loss incurred by a person to the extent to which it is of a domestic or private nature. Then the second one is any expenditure or loss of a capital nature or any amount included in the cost base of an asset. Any expenditure that you incur to acquire capital goods or the fixed assets, the non-current assets, it is taxed. The capital expenditure that are used to acquire fixed assets like land, building, those things, it is taxed. It is not deducted. You're not supposed to deduct it. And in case it was deducted in the statement of financial performance, you're supposed to add it back. Another non-allowable deduction is any expenditure or loss which is recoverable under any insurance, contract, or indemnity. It is supposed to be taxed. In case of bad debts recoverable, it is supposed to be taxed. Insurance, remember insurance, if you insure something and then it happens, they're supposed to put you back in your original position. So any insurance recoverable, it is supposed to be taxed. Anything that has recoverable in it, just know it is non-allowed. Then another one, you have income tax payable in Uganda or a foreign country. In case you did not pay income tax last year and is supposed to be paid in this year, it is supposed to be taxed. So any income tax payable in Uganda or a foreign country, it is supposed to be taxed. Another one we have is any income carried through a reserve fund or capitalized in any way. Capitalized expenditures, they are supposed to be taxed. Then we have the cost of a gift made directly or indirectly to an individual where the gift is not included in the individual's gross income. In case you receive any gift as a business and then that gift is not included in your gross income, you're supposed to add it back. Any gift that you receive in relation to business, it is supposed to be taxed. Another non-allowable is any fine or similar penalty paid to the government or any political subdivision of a government for breach of any law or subsidiary legislation. In case of those court fees and the penalty by court, they are supposed to be taxed. So any fine or penalty paid to the government or anything related to the government is taxed. Another one is a contribution or similar payment to a retirement fund by the employee, either for the benefit of the employee or for the benefit of any other person. So any contribution to a retirement fund or a retirement company, those companies that deal with retirement things. So any contribution made to them is taxed. Another one is a premium or similar payment made to a person carrying on a life insurance business on the life of the person making the premium or on the life of some other person. So any payment for life insurance that has to do with life insurance business. Any payment to a life insurance business is supposed to be taxed. Another non-allowable deduction is the amount of pension paid to any person. So where you see pension anywhere in business income, it is supposed to be taxed. Then lastly is any alimony or allowance paid under any judicial order or written agreement of separation. Any allowance that you pay in the courts of law or written agreement of separation, it is supposed to be taxed. So those are the non-allowables under business income.